Hi everyone, welcome back to the Investing Guideline. Every Sunday I'm going to be doing a little different than my usual technical analysis content. I'm going to break down the most important things that happened in the markets this week, what it means for you, what you should watch out for, and how you should be positioning yourself. This week we got two major stories. A brutal tech sell-off on Friday that erased hundreds of billions in a single day, and the biggest IPO in the history of the stock market, SpaceX, which is about to go public. So let's get into it. So on Friday, the Nasdaq dropped over 4%. So that is its worst single day since the tariff panic back in April 2025. The S&P 500 fell nearly 3%. A lot of people woke up on Saturday morning and see their portfolios take a hit. So let's explain what actually caused this. It started with a company called Broadcom. If you are not familiar, Broadcom is one of the biggest chip companies in the world. They make the custom AI chips used by Google, Meta, OpenAI, and Anthropic. So Broadcom reported earnings this week and actually beat expectations. Revenue was over $22 billion. It sounds great, but the problem is they didn't raise their AI chip forecast for the year. They kept their expectations same, but stock has been up 40% in 1 year. Investors don't just want good, they definitely want better than good. So Broadcom dropped 15% in 2 days. And because it's so heavily connected to entire AI trade, it dragged everything else down with it. AMD fell 12.6%, Micron dropped 17%, and Intel fell 9%. Even Nvidia slid over 3%. Then on top of that, Friday morning the US government released the jobs report for May. 172,000 jobs were added. It's nearly doubled what economists expected. That sounds like great news for the economy, but for markets it's actually complicated. And let me tell you why. So when the economy is strong and people are employed, inflation tends to stay elevated. And when inflation stays high, the Federal Reserve has to keep interest rates high or even raise them. So higher interest rates are bad for tech stocks because these companies are valued based on future earnings, and higher rates make future earnings worth less today. So the strong job reports basically told investors don't expect rate cuts soon. It implied rates might go even higher. So that was the final push that sent chip stocks off a cliff. So the question is, what should we do now? So now here is the part that actually matters for you as an investor or trader. First, you shouldn't panic. Pullbacks like this are completely normal, especially in a sector that have run up a lot. So the Nasdaq was up 25% in just 1 quarter before this. So 4% single day drop is a correction. There's nothing to be worried about for long run. And second, you should understand what the market is telling you. So when a stock like Broadcom beats earnings but still falls 15%, it's a warning signal. It means expectations are priced in very aggressively. It means the market is no longer forgiving anything that isn't perfect. That is a sign that tech valuations, especially in AI names, are stretched. This doesn't mean sell everything, but it does mean you should be cautious about chasing AI-related stocks at a high prices right now. If you are looking to add positions, you better wait for cleaner setups. And if you already have positions, you better reconsider where your stop loss levels are. And thirdly, you should notice what went up on Friday. When chips crashed, money flowed into consumer staples. Procter & Gamble went up 5%. Clorox, Walmart, all green. So this is called a defensive rotation. So when sophisticated money gets nervous about AI stocks, it parks itself in a boring stable businesses. I think that's very useful information for now. And now let's talk about the elephant in the room. As you might guess, it's SpaceX. Elon Musk's rocket and satellite company is going public on June 11th. They are planning to raise $75 billion. To put that in perspective, the previous record for the largest IPO in history was Saudi Aramco in 2019 at $26 billion. So SpaceX is aiming for nearly 3 times that amount. The company would be valued at $1.7 trillion. So that would make it one of the top 5 most valuable companies on the planet, right behind Apple and Nvidia. And here is something unusual about this IPO. They are allocating 30% of the shares to retail investors, so to the regular people like you and me. The typical mega cap IPO gives retail about 10%. You may actually be able to get in on this. The price is set at $135 per share. So to summarize this week, 1. The tech sell-off was triggered by Broadcom's flat AI guidance and the strong jobs report. Both signal that the easy gains in AI stocks may be behind us for now, so be cautious about chasing. 2. Defensive sectors like consumer staples are showing strength. If you are building a portfolio, this is worth paying attention to. 3. The SpaceX IPO is historic. It is exciting, but don't let the hype rush you into a buy decision. Watch the price action in the first week before you making a move. So that was it for this week's commentary. If this format is useful to you, let me know in the comments. I will be doing this every Sunday, and I will also keep making technical analysis and trading contents. So if you want to go deeper on how to analyze chart setups, entries and exits, that's what the rest of this channel is all about. You can check the playlist at the end of this video. So don't forget to like and subscribe. See you next week.